One of Trump's signature promises repeated in his victory speech is a massive infrastructure spending program. The policy supports investments in transportation, clean water, a modern and reliable electricity grid, telecommunications, security infrastructure, among other important infrastructure needs. He also promises to create thousands of new jobs in construction, steel manufacturing, and other sectors to build the transportation, water, telecommunications, and energy infrastructure needed to enable new economic development in the U.S., all of which will generate new tax revenues. Trump has also promised to boost U.S. military spending. This infrastructure plan will likely gain support from both parties, considering Clinton had also supported big spending on infrastructure, especially if funding is widely distributed across congressional districts of both parties. These investment platforms are liable to provide a strong boost to U.S. economic growth. The investment in infrastructure could also create millions of relatively high-paying jobs. Experts have debated whether there will be enough skilled labor workers to fill these positions. With the labor force already tightening, employers are having a hard time finding employees for skilled trade jobs. Trump's pledge to restrict immigration and deport millions of immigrants already in the U.S. may become a problem due to the fact that there are not enough workers to fill the jobs Trump has promised to create. A slowdown in the growth of the labor force over the last decade has created a massive slowdown in economic expansion. Trump has also promised a reformation of the tax code, which has been long overdue but is now a possibility due to the Republican control of Congress. Trump has promised to reduce taxes across the board, especially for working and middle-class income Americans who will receive a massive tax reduction, which would reduce the top tax bracket from 39.6% to 33%. He has also stated he will eliminate special interest loopholes and make the business tax rate more competitive to keep jobs in America. He will lower the business tax rate from 35% to 15%, and implement a 10% tax on repatriation, which will instantly bring trillions of dollars back into the U.S. economy, which is now stored overseas. With Trump's plan, the cut in personal income taxes would free up more money for American households to spend, which would also produce a boost to the economy. Economists are still trying to figure out how Trump plans to pay for large tax cuts, massive infrastructure investments, and higher military spending. Various estimates have put the cost of his tax cuts alone at some $6 trillion over 10 years. It is hard to believe that the Tea Party fiscal conservatives in Congress would be willing to blow out the budget deficit like that, said capital economics economist Paul Ashworth. It would put the federal debt burden on course to exceed 100% of GDP within a few years. There have been some major concerns in the bond market about the impact of a negative Treasury credit rating due to the higher deficits and some uncertainty over exactly what a Trump economy will look like. The day after the election, Treasury bonds took their biggest plunge in 5 years. Until the market closed on election day, Treasuries had gained 3.8% for the year. The worry is that global investors could see U.S. Treasury bonds as riskier, driving up interest rates and raising the cost of borrowing as Trump increases spending in an effort to boost the economy. That could encourage inflation and push the Federal Reserve to raise short-term interest rates faster and add to the supply of government debt in the process. That could also push mortgage rates higher, which would make it harder for homebuyers to borrow and create opportunities for the housing industry. Trump made U.S. trade policy a major theme in his campaign with threats to impose steep tariffs on Chinese goods, renegotiate or scrap the North American Free Trade Agreement with Mexico and Canada, and remove the Obama administration's proposed Trans-Pacific Partnership deal. Experts are unsure about how big an impact that will have on U.S. exports. A lot depends on how U.S. trading partners respond if the Trump administration carries out those threats. Higher tariffs on imports would raise prices for U.S. consumers and businesses, possibly causing higher inflation, which would complicate matters for the U.S. Federal Reserve. The central bank is expected to increase short-term interest rates. Even if Trump moderates his position on trade, overall global shipments of imports and exports have already begun slowing worldwide. During all of this financial uncertainty, gold is an insurance policy that investors can count on. Unlike currencies created by governments, gold investments won't diminish due to uncertain political factors. These fiat currencies fluctuate based on things like monetary policy and trade, making it challenging to predict future earnings for an average investor. Hoarding of the precious metal by central banks and private individuals is approaching record levels. Gold has been the insurance of choice for thousands of years for the preservation of capital. Gold is simply the best insurance against inflation or deflation, and should be an important part of a diversified investment portfolio because its prices increase in response to events that cause the value of paper investments such as stocks and bonds to decline.